Hi everyone, hi ladies and gentlemen. Wish you all first happy new year and let me bring to you market outlook for January 2024. I'm sure 2023 was a very exciting year for you all of you, and let me bring in how we are looking at markets in 2024. So we help our clients to invest in high quality businesses and build long term wealth, and accordingly 2024 is another exciting year as far as Amrit Kal is concerned. So let me just take you through what exactly we believe as far as the next year is concerned. So these are the four areas that we are going to discuss in this particular video. How 2023 was different than 2022, how the globe is looking as far as their economy is concerned, and within that how India is differently positioned, and lastly what are the opportunities and the market outlook, the way we want, the way we are seeing. So I'm sure this is what is the most exciting part that you guys are waiting for. So let's discuss 2023 versus 2022. I'm sure many of you are aware many large events really took place. If you look at Nifty 50, which has actually crossed above 21,000 and has been kind of scaling new highs each month, each quarter per se. But if you look at 2022, it started a bit with some of the risk like global Silicon Valley Bank or small banks kind of going bankrupt in US, and similarly rate hikes, which is what is impacted the initial part of the year. But as the year progressed, we saw that rate hikes were being paused, we saw inflation coming down, and incrementally even the risk of elections coming down, and which is what actually spurred the markets as far as 2023 is concerned. So let us kind of delve deeper how things panned out in 23. So it started with a negative setup itself, given the fact that 22 had a bit of negative returns ranging from -8% to 34% as far as global setup is concerned. But India, no doubt, was in a positive territory. And if you look at this year, it actually delivered positive returns. So India was a market which delivered positive returns in both of the years, 22 as well as 23. Why was 22 an issue? Primarily because of the geopolitical issues which impacted crude and which is in turn impacted the inflation. While inflation in 22 was the biggest worry, but a year post that, 3, we are seeing already it coming down, and it is further kind of diluting primarily because of the crude softening as well as other factors coming into picture. If you look at how mid caps or small caps have behaved, we may say that yes, mid caps and small caps out the Nifty, but at the same time, the biggest hero of the year was SME IPO, where it delivered almost 90% returns versus cap or small cap, which was at again strong 45%, but SME IPOs delivered a strong 91% after delivering 38-39% in the previous year. If you look at sectoral breakup, if you, I mean the PSU banks delivered strong returns in 22, which also continued in 23 as well. But the sectors which came back were pharma and IT in 23, and the real show taker were realty, public sector enterprises, autos, which delivered returns in the range of almost 78% to 45%. So that's where the strength lied. Uh, Another trend that was seen was foreign ownership kind of hitting quarter lows at almost 16%, and domestic ownership going up to almost 35% of market. We saw 23 with strong inflows from both FIIs as well as mutual funds, and we all know that SIP flows have been almost $2 billion now, and rising every month on month. It's not just mutual funds or FIIs which have been kind of investing money. We've seen good inflows as far as AIFs is concerned, and there is a fantastic growth in the number of registrations on AIF side as well, which apart from bringing in money to the markets, it is also helping the private investing market per se as well. Uh, IPOs, I mean, as we discussed, BSE IPO was the best return generating sector or best index as such. But if we look at how it really, I mean, we saw IPOs coming back with almost 60 IPOs or 58 companies raising almost 50,000 crores in on the main board. But the real show was here, man. Almost 180 companies raising 5,000 crore rupees. So it was a real comeback. And let me further present to you how things panned out on the SME IPO side. So the IPO subscriptions, while on the main board, if we look at the whole year, at the end of the year there were like companies which got almost more than 100x kind of subscriptions. Overall average subscriptions were over subscription were at 40x. So just look at how November is. I mean, companies were looking to raise 8,000 crores, they got subscriptions of almost more than 5 lakh crore rupees. Same was the case in November. So cumulatively, if you look, November, December, the market or the companies asked for 20,000 crores or 21,000 crores, they almost got more than 10 lakh crore rupees as subscription. Now, look at this. SME was almost 90x oversubscribed with almost 9 IPOs greater than 400x subscription. So that kind of stupendous oversubscription was there, that kind of liquidity is existing, that kind of demand for listed equities is there. So that's as far as 2023 is concerned. Yes, in addition to this, there were further many events. We landed on moon. We are now almost fifth largest economy as far as market cap is concerned. We are again 2022 we overtook UK. Further economy is really looking great as far as India is concerned, right? On the global side, let's come here. I mean, just have a look on these large three economies. United States, where GDP surprised quite well, while the narrative was of recession, but we saw a better economy outcome. uh, Fed maintained its stance of 5.25 and 5.5 as far as rates are concerned, but at least they started giving signals of rate cuts in 2024, while the peaking out, I mean, thereby signaling peaking out of interest rates. Now, labor market is something which needs to be on a watch, where unemployment increase is expected of about 0.5%. So, net as far as US is concerned, while the growth is positive, it could slow down, and primarily the positive part was signaling of the rate cuts. China, yes, post stimulus we could see inflation rising, but it is well in control. The whole idea is, or the whole impact in China is about real estate kind of slowing, and which is where China as a country is trying to stimulate its economy. But the wholesale inflation out there is literally hitting the country. On the euro area, yes, they got hit a lot by the energy rise, as well as now supporting on the geopolitical situation in their area. The growth is very tepid, and there has, I mean, the expectations of economic recession or economic contraction is there. So, I mean, euro region definitely remains to be watched closely of the three large areas, because the growth is missing there. There are recession expectations, and they cannot cut rates until US starts cutting rates because of the interest rate differentials. So I mean, it's relatively, I mean, the economic recovery is quite fragile in euro area. The good news is US yields have started contracting almost by 120 basis points on back of expectations of rate cut in 2024. Global inflation has kind of settled down, come down, and expect further expectations of cooling off to almost 3.8% by 2028. Of course, 25, 24 will be at least in well within in control of about 4.5 to 5.5%, which is still manageable as compared to the high inflation seen in 2022 period, 2022 and start of 23 period is concerned. Now another area of concern is rising vacancy rates, which needs to be watched in developed world like North America, or for that matter even in Asia Pacific, especially China. So this definitely needs a watch. Elections are another area that needs a watch on a global scale, because almost 75% of the investable universe will be on elections. We'll have a further discussion on elections in India, which is due around April-May period. But yes, this needs to be watched. US is due for elections in November. So all these things needs to be watched, and generally there is volatility before elections per se, while post elections we see rise, but generally there is a before elections. Now let's come back to India, how where India is different. We discussed on the global side that economies are in a mixed environment as such. So how India is relatively different. So GDP, of course, India continues to be a fastest growing economy or a large country. I mean, if we look at estimates, even they are being kind of beaten up, or maybe they are outperforming what the expectations are there for the country. So even RBI now expects almost 7% kind of a growth for 2023, and even going forward, the growth rates against many large countries, including China, we are going to be higher than them for the upcoming decade itself. So by 2050, India is expected to be a third largest economy, overtaking even Germany per se, right? So that's what is expected. This is on PPP basis. On the real basis, yes, Japan is ahead of us, possibly by 2050 when we would be kind of overtaking them. Why do we believe it's still in a strong position? Because even the balance sheet is far better than many of the large countries. We are just, I mean, the debt is quite manageable. It's not just debt, even the forex reserves are kind of built up, and especially in this particular year, despite the US dollar kind of appreciating, Indian currency was quite strong, and it was strong along with forex build-up that has taken place. So as a combination of the two, we are in far better position, even in a soft fallout in the global scenario. So that gives us a cushion as far as the forex is concerned. Now let us look at the opportunities that are there. So in this backdrop where the global economy is kind of soft or mixed on the softer side as well, because US is strong but Europe is quite weak. China continues to be in a area where they have to stimulate their economy, right? The maybe somewhat different is Japan, where the growth is really coming back, but overall scenario is quite mixed. But within that, India continues to be strong. So let us kind of talk about opportunities in 2024 and beyond, and within and maybe then talk about the market outlook. So let us first see what is the long term outlook, which is what actually will keep our overall view intact of being positive on India for this Amrit Kal period. So these are the three large drivers which will keep us going in the Amrit Kal period: the demography, the digital stack itself, and the enterprising India. Now let me also further give some inputs on why we believe all three things are going to help us drive a very long and sustainable growth rate. Now look at this. I mean, in terms of the demographic dividend that we are talking about, most of the countries have kind of used up their demographic dividend, and rather India is going to have it for the longest period that is expected. I mean, most of the countries are have either used up their dividend or are likely to kind of are towards the end. Like look at China. They started in 94, but almost by 2030 it is likely to be finished as such. Or I mean, Brazil again by 2038. We are going to have this dividend long lasting till almost 2055, and which is where the expectation is we could be like world's top economy as such, right? So while I talked about demography, the other part is digital India. There is a fantastic book written by Mr. Nandan Nelankani, who is actually the leading architect of digital India or the digital infrastructure right from Aadhaar. And he has come out, he had published a book in 2016 which talked about how how billion Indians can really be empowered. And within that book, he has talked about many things, of which we have already seen success of the digital infrastructure that has been brought about, but there are still many pending or maybe work in progress digital initiatives which are going to leapfrog our country to the next level. So we have already seen Aadhaar, how almost 1.3 1.2 billion people are already using it. Almost at least 100% of adult coverage is there, right? UPI, every other payment is literally taking, even the chai wala is being paid by UPI. eKYC, where any kind of authentication is to be done, we are able to do that. GST, every other bill, are we are seeing formalization of the whole economy. So likewise, the one which have already come in, like FASTag, DVT, public infrastructure, the benefits are already seen, like ONDC or account aggregator. The benefits are just starting to be seen, and there are further areas where it is yet to be kind of gain scale or to be implemented, like in area of politics, case of health, in case of teaching, or for that matter power. And the biggest one is the judicial reform. So we are yet to see many things coming up, and possibly post elections, once a majority government comes in, we would see digitalization on these processes, which would further add to our growth, which will further add to our the empowerment of 1.4 billion people in the country. So last but not least, as far as the longer term trends that we are talking about, while we spoke about the young population, the digital part, and the entrepreneurship, within entrepreneurship, what we are seeing is the mega trends that are going on, including urbanization, climate change, digitization, globalization, the shift in wealth and power, is of women, and spiritual awakening. This book, which talks about mega trend, was being written in US, but that is very much applicable in our in Indian context as of now. So we are seeing a huge undercurrents of mega trends that are likely to benefit us in terms of enterprising and stuff like that. So as a combination of these things, we believe in these six mega trends or mega themes that are likely to benefit us, which I'm going to discuss further in our video. A small glimpse, while this is what is going to help us in Amrit Kal, but I would throw light on which are the ideas or which are the themes which are likely to play in the near term, and which is where we are building our portfolios for the near to medium term, which is what is going to build the bridge for the longer term, benefiting from these themes. So globalization, which includes manufacturing, China plus one, PLI schemes, or scalable growth, which is likely to come in as far as globalization is concerned. Consumerism, we all know, consumption, and more than that, the K-shaped recovery that is taking place. Formalization of economy with GST coming in. Clean energy or renewables, including electric vehicles, is going to transform the way that transportation is taking place in the country. Financialization, and last but not least, technology boom, which is one, of course, the IT coming back by end of the year, and implementation of the technology or the investments that have been done in technology, including artificial intelligence, is likely to benefit the companies in 2024 and beyond. So as I mentioned, manufacturing, yes, the mainland China or the supply chain constraints are leading to reorientation as such, and which is why we are seeing that India is gaining on that part and China is losing out. While there is no one-on-one correlation, but yes, we are seeing a lot of manufacturing being shifted to India. They are in a build-up phase. Once we see those build-up or those capex being kind of realized, we would see a further uptake as far as the exports is concerned. India capex upcycle is yet to see the best of its time. We are just from around 27% of GDP to 30%, and further build up is likely to be there with railways coming in, with renewables coming in, with power coming in. I mean, we are seeing even, I mean, we talk about this. I mean, the power capacity addition is further quite healthy, and it's not just renewable. It's a combination of thermal and renewable, which is going to drive the power capex in the country. EMS, as we mentioned about manufacturing and the shift of manufacturing from China to India, there is a huge impetus as far as electronic manufacturing is concerned. And by FY26, this is what the target is, which is almost 3x if you look at electronics production is concerned, and almost 5x as far as the exports is concerned. Uh, this is another big trend which is likely to change the way manufacturing is being done. While there may not be a direct beneficiary, but in terms of manufacturing itself, uh, huge factories can be set up with industrial robots in no point in time. And given the expansion that we are in, expansionary phase that we are in, possibly we would see benefit from these kind of automation, and this is likely to shorten the period of starting with a factory, shorten the period of overall cycle of manufacturing. The again scalability would be much larger with the automation that is likely to take place. Electric vehicles is another area that is likely to change the way we are transportation is taking place in India as well as world, right? Renewable capacity that we talked about is likely to grow rapidly for the next decade per se. Another area where we feel that there is a pocket of opportunity is on the PSU side. It continues to be at a huge discount to what it used to trade during 2012 to 2017-18. It is almost at 30% discount from there. And it's not just about valuation discount. There is a huge change in the way these PSUs are doing business. Uh, let's come to the earnings part on the Nifty side. They have been quite stable. They are steadily improving, unlike the world is actually seeing a downgrade in their earnings. The implied growth rate is also quite healthy in the range of 15 to 20%. Trajectory of earnings, if that is another big trend that is taking place, is shifting more towards domestic. So the sectors which actually supported earnings growth during 2013 to 21 were global oriented sectors like metals, energy, chemicals, IT. But if you look at maybe for the next 21 to 24, we are seeing domestic oriented companies like NBFCs, real estate, banks, auto are showing much higher or much better earnings growth. Again, if you look at the valuations that are not exorbitant, while they are at a higher than what they used to be, but they are not exorbitant, which doesn't warrant a kind of alarming thought process. Nonetheless, there could be shorter term corrections in the longer term bull run that we are talking about, but we are no way in a era of a very ballooned valuation per se, right? As we discussed, domestic earnings likely to grow faster than the Nifty itself, and within that, if we look at our premium to the emerging markets, it's still below previous peaks that we had seen in maybe post 20 to 2020 to 2022 as such, right? So again, this is the big risk that is being talked about. But if you look at the last 4 or 5 elections, we have seen rather 6 months before result date there has been a good rally in the markets. So at least this trend takes away any kind of a huge fear, if at all, because of the volatility in elections, right? Now, just to summarize the overall presentation, what we saw is, yes, the medium term to long term India growth story continues to be strong, It is going to be third largest economy by 2050. It largely driven by trinity of demography, digital, and entrepreneurship, which is further going to add that sustainability or the confidence to growth is concerned. Rising significance of India in the global markets itself. We have seen inclusion to the bond index, which is further going to help inflows in India. G20 meet where we demonstrated our leadership, landing on moon, which further showed our capability as far as defense, or for that matter, I'm sorry, space technology that we own, which is further of course offshoot of defense. Falling inflation as well as interest rate are likely to create opportunities, because last 1.5 years there has been huge pressure as far as inflation eating away the pockets of consumers, thereby huge pressure on central banks to hike rates, and which is further with further increase in interest rates, it has kind of eaten away the pockets on the EMI side. So yes, as a combination of all these things, we are likely to see easing, which is what is going to help and maybe create opportunities. Earnings growth is intact, with being tilted towards domestic. Effects of large investments that have been done in technology or renewables will start taking effect in 24 and beyond. We may see a bit of a softness as far as first quarter or first half is concerned, primarily because of the strong run up that we have already seen in 23, but it would catch up on the upside trajectory by second half once the new government is in place, new reform charts are in place. What we are seeing on the sectors that we like or we are invested in is banks, PSUs, even MFIs is what we like. Within manufacturing, yes, any companies maybe structured or likely to benefit from electric vehicles. Defense or capital goods is another area that we are looking at. QSR should come back with easing inflation in picture, and that has to be balanced with IT and chemical. While these two sectors are likely to see slower growth because of the global issues, but they are likely to come back with the global economy also seeing an uptick post reduction in rates. So we have to balance our portfolios with exposure to these sectors as well. But what are the risks to be watched? Of course, geopolitical issues, which ultimately had led to rise in crude and inflation and interest rate. While we don't expect it to pan out, but this needs to be watched definitely. A substantial slowdown in growth due to either supply chain issues or any other issues that may crop up. Any increase in capital gains tax during budget, either in interim budget or post elections, and of course any kind of noise because of the elections could add to the volatility in the markets. So net I would say the markets are in good shape. There are no large risks, if at all they were there, in terms of inflation and interest rates. They are kind of subsiding. And lastly, yes, we are in a bull run with substantial wealth that is likely to be built up in the Amrit Kal period. I wish you all the best with the investments or the wealth that you are likely to create by investing in the markets. Wish you all the best for 24 and beyond. Thanks a lot. Nonetheless, the driving factor for me is always this chart, where India used to be almost 30% of the global economy and we are just 3% as of now. So it's just the time to see whether in the upcoming decade we are we come back to, or at least march towards such a kind of a number. So this is the driving factor for me to stay invested, stay bullish on India as far as Amrit Kal is concerned. Thank you. Thanks a lot. These are our handles which you can follow, and thank you.
Remember, investment in the securities market is subject to market risks. Always read the related documents carefully before investing.